You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody. That music means we are back once again on TWIFO, This Week in Futures Options, a program where we break down the week that was and indeed still is on the futures options side of the fence. My name, of course, is Mark Longo from the THEOptionsInsider.com, as well as from the network upon which so many of you are enjoying these days. Hope you're having a good start to your trading year. Now, a couple of weeks in. Of course, if you like what you hear this show, anything else we do, throw a like, star, comment, rating, review, whatever you feel motivated to do. All of it in aggregate does help new people continue to discover the content, coming off a hot year for the network and looking forward to another one here in 2024. Of course, if you want to turn your audio game up to 11, head on over to theoptionsinsider.com/pro. Once you're there, you can join us for a live stream. So there's every other show we do, great giveaways, options oddities, pro Q&As, and some other fun exclusive items. I did a great panel yesterday at the Securities Traders Association of Chicago conference with our buddies, the Flowmaster and JJ Kinahan and some other guests. And we're going to put that up there for our pro listeners to enjoy it. Just don't tell anybody. A little bit of a surreptitious recording just for you pro folks. If you want to check it out for yourselves, see what all the fun is about. Maybe you didn't want to come to Chicago in the freezing depths of January to check out our panel. We got it there for you. theoptionsinsider.com/pro is the place to go. As we go around the horn, see who's joining us today on the old CME Group hot seat. I'm pleased to welcome back for the first time in the new year our old friend, Miss Carley Garner from DeCarley Trading. Carley, welcome back to TWIFO for the first time in 2024.
Hi, Mark. Thank you. It's good to be here.
How's your new year going so far?
So far, so good. I have zero complaints. And I'm in Las Vegas where it's sunny and 60s, so I truly have no complaints.
Yes.
Life's good.
You're 60 to 80 degrees warmer than here, so nothing to complain about there as we keep on rolling right on into the Movers and Shakers report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers report.
All right, everybody, welcome to the Movers and Shakers report, the portion of the show where we break down everything lighting it up to the light side, aka the upside, and to the dark side over there at CME this week. And Carley, we're going to take a step back from that for a second because it is your first appearance here for the new year. So let's start looking back a little bit at your personal movers and shakers for 2023. When you look back at the mad, insane year from the futures options markets that was 2023, what really stands out to you? What were some of the highlights, maybe the lowlights even?
Well, I mean, we're coming off, to be honest, 3 years of just pure chaos in the commodity markets, and 2023 for me was a bit of a it was kind of the year of the pain trade, and it was a year that was kind of a wake up call for trend traders. Trend trading can work really, really well in certain environments, but most of the time it does not. And I think there was probably some tough lessons learned last year by trend traders. We had a lot of whipsaws. We had a lot of really big reversals, and particularly those that are following sentiment. Like, for example, everybody thought the stock market was going to do one thing and the bond market was going to do a certain thing. And what we got was the exact opposite of those consensus opinions. And we saw the same thing in crude oil and some of the other commodity markets. So it really was a tough year for people that, maybe are listening to the masses as opposed to doing their, looking between the lines for different clues. Anyway, the markets that stick out for me is the bond market, and both from a painful perspective and also from a positive perspective, because we got when everybody was bearish bonds, we were bullish, and it was pretty painful at first. We were a little early to start employing some risk capital there, and honestly, it got kind of uncomfortable, and we started to think we were a little bit crazy, and then lo and behold, it finally worked out. But I'm sure there were lessons learned on both sides of the tape in treasuries last year, and it was something that quite honestly has never happened before in history. Going back hundreds of years, well, not hundreds, but at least 100 years in treasuries. So I learned a lot, and hopefully everybody else did. And I did most specifically learn some lessons in risk management. So there you go.
Always good to learn some lessons every year
sure.
out there. It's what keeps us going here. Speaking of keeping us going, towards the end of the show, I'm telling you now, Carley, I am going to ask you for your VIX pick for the close of this year. I'm asking you because of all of our network guests last year when we rounded out the answers last year. You were the closest. You had like a 13 handle, and I think we closed it around a 12.45. So you weren't within our margin of victory, but you were pretty close. So I'm going to have you tilted that windmill again in a little bit. So start mulling that over in your mind. We'll come back to that in a little bit here. But first, let's go out to the movers and shakers for this week. Carley, where should we begin? To the light side or to the dark side?
Light side, please.
All right, to the light side we go, kicking things off with a ray of optimism, which is good because really, if you look at the full report, which you can find over there if you follow CME on Twitter or if you follow us on Twitter at Options, you can see that this report is roughly 75, 25, 80, 20 green, or I should say red over green out there. A lot of red to be found out there on the tape this week. So to the light side we go. There isn't a lot of it. We can probably do a light side top 10. That's probably about it. Number 5, listeners, we have live cattle. So kicking things off in the livestock, up 1.78%. Number 4, we've got our old friend, the Nikkei. Nikkei's having an interesting run out there. Japan, all things Japan, just very intriguing right now, up 1.85%. It was number 3 to the same direction last week, up 5.18%. So a good couple of weeks, up nearly 7%. Again, not a lot of paper going on out there, so I'm probably not going to sink our teeth into the Nikkei this week. Number 3, back to the livestock. Got a bit of a trend here. It's feeder cattle, up 2.4%. Number 2, off to energy we go. It is WTI. Go figure. A little bit of unease, some missiles flying in the Middle East. You're probably going to see some upside action in energy. That's what we're seeing this week. WTI up 2.57%. And the number 1 light side mover this week, keeping in energy, it is RBOB, up 2.75%. You know the deal with RBOB, not a huge trader out there. So of the two, we probably would sink our teeth into WTI, but we shall see. Maybe some of the livestock as well. To the dark side we go now, listeners. Number 5, we're kicking it off in the equities, in particular the utilities sector, off 3.37%, so a rough week for S&P utilities. Number 4, off to the metals we go. It is palladium, off 4.02%. It was number 2 in the same direction last week, off 4.5%. So a rough couple of weeks for palladium, off about 8.5%. Oats, number 3. So to the ags we go here. Oats off 4.69%. It was number 2 in the other direction last week, up 7.25%. So just a wild couple of weeks. We're up, we're down in oats. Love to sink our teeth into it, but unfortunately only about 5 contracts on the tape. So probably not going to hang out there. Number 2, back to energy we go. It is Nat Gas continuing to move in the dark side direction, off 4.96%. And then the number 1 dark side mover this week, you might be able to guess this one if you've been following the headlines. Yeah, it's our old friend Bitcoin. Man, what an intriguing area to watch the crypto space has been over the past couple of weeks. Bitcoin taking it on the chin this week, off 9.75%, our number 1 dark side mover in a week that saw a lot of red out there. So that is certainly saying something. In fact, a lot of people are intrigued by all things Bitcoin and the ETF and everything, Carley. So I think we're going to start out there first.
It's time to explore the volatile world of Bitcoin, Ether, and more. It's time to talk about crypto.
All right, listeners, to the wild, the woolly world of crypto we go. We're heading out to the listed side for all of you out there who like yourselves a little bit of listed crypto derivatives. Head on over to cmegroup.com/TWIFO. Going to go into that drop down. You're going to go down 1 slot. It is an alpha order list after all. 2 cryptocurrencies, and then from there we could start anywhere we choose out there. But before I dive into what flow we saw this week, Carley, it's obviously been a fascinating couple of months really in the crypto space. Of course, all the rumors about these ETFs getting approved by the SEC just drove a ton of upside paper in all of these names, in Bitcoin, in ETH, in Solana, and all the big cryptocurrencies, and also a lot of the crypto related names, talking on our shows like the Option Block, or even on the panel yesterday, names like Marathon Digital Holdings hitting over 500,000 contracts a day in ADV now, Bitto threatening 100,000 contracts a day now, Riot, Coinbase, all these names that are crypto related, people are just slinging options on them like they're going out of style. Not hard to understand. Marathon, huge upside, huge downside, off nearly 50% now. In fact, Carley, I was just looking at the charts just earlier today for things like Marathon, but also Bitcoin and everything else. And, we often throw around that adage, buy the rumor, sell the fact. And yet, I'm hard-pressed looking at these numbers to think of a better or more reliable example of that trade than what we saw in Bitcoin over the past week or so, Carley. So what are your thoughts on all this madness we've been seeing out there and the ETF approvals and maybe what that means going forward?
Right. No, I think you're exactly right. This is a textbook example of buy the rumor, sell the fact. And I think, obviously that's what we're getting here. It should be put in perspective. I'm not necessarily a Bitcoin bull, but I will say this. There's a whole lot of hoopla over this recent sell-off, but the reality is it just puts us right back to where we were 10 days ago, maybe 12 days ago. So it's just kind of a round trip. And sometimes you see that in markets. It doesn't mean it's the end of the world. In fact, we haven't broken down below support on that's probably somewhere around 40,000. So as long as it holds above 40,000 on my chart, path of least resistance is still higher. Again, I'm not necessarily a fundamental bull, but I do look at charts, and that tells me that it's not the end of the world quite yet. Now, if we do start breaking below 40,000, I'm not sure what's really going to stop it until we get quite a bit lower. So be careful out there if you do have some exposure. It is interesting, though, with all of the news going on with the ETFs and everything, we have gotten kind of a renewed interest by our brokerage clients. So suddenly everybody is interested in participating in a market that they'd almost kind of pushed to the back burner just a couple of months ago. And so it's getting back into the headlines and people are starting to trade it. So I hope the liquidity in the option market picks up, because I'd really love to see a little more action there so that people can participate in a more meaningful manner.
I was just going to ask you that. So I was curious if the phone was ringing a little bit more, and it sounds like that was the case. The headlines, they tend to do that, Carley, right? People see the headlines. They want to sling a little bit of the old BT. It's hard to blame them at the end of the day. Is there a more headline and news-driven product out there than Bitcoin? I don't know. I don't know if there is one. It's kind of hard to find a fundamental argument for Bitcoin, right? So you got to find your arguments where you can. Looking at the numbers right now this week, listeners, you would think it wasn't exactly coming off the heels of a hot, much anticipated ruling week, because we're not seeing the type of blow the doors off types of numbers you might expect The micro Bitcoin options right now doing a little bit less than 1,000 contracts, about 800 or so this week. And of course, the big dog, the big Bitcoin 5x multiplier, doing about 700 and change as well. So a similar size out there. Obviously, the multiplier makes the big dog 700 lot much beefier from an overall value perspective. Looks like on those contracts, it was the 40,000 puts going up about 223 times. So pretty much a third of the paper, if not more, is going up in these 40,000 puts, which makes sense. That's kind of what Carley was talking about, that very psychologically important 40,000 level. Those are expiring in 8 days. Looks like paper was opening to buy these pretty much throughout the week. Let's look at the skew here. Yeah, pretty much. So folks hedging on the 40,000 strike in 8 days. Could we be below 40,000 in 8 days? We could be 40,000, below 40,000 by the end of the show. I mean, the Bitcoin has been whipping around quite a bit, but maybe not the numbers you might expect. It looks like the only product that really was putting up some size this week was on the Ether side. In particular, it was the micro Ether. Again, these are micro-sized contracts, so bear these numbers with a little bit of grain of salt, but 6,200 contracts going up in micro Ether. So again, these products have kind of struggled to get traction. I think people were hoping by this point they would have a little bit more interest in them. There is still that tussle going on in the crypto space. Talked about this a little bit on the panel yesterday about, cleared versus not cleared. A lot of people in the crypto space just can't come to grips with a centrally cleared product, which is a shame because there's another one on the horizon now. In fact, it just went live last week, Carley. I think they've done a one lot so far, so not a ton of volume yet, but the new SIBO getting back in the futures game as well. Does that excite you, Carley, to have more listed derivatives in the crypto space? At the end of the day, growing this ecosystem should benefit all of them, right?
In theory, yes, it should. And I'm a fan for more products as long as there's volume there to support it. So I'm rooting for it.
Yeah, so all of you out there who've been saying, hey, do some more crypto on the show. We're trying. When the numbers are there, we'll do it. Unfortunately, no crypto rundown this week. Would have been a great week to do one, but we were off, of course, for the Martin Luther King holiday here in the U.S. So crypto gets hit a lot on our network for that. Just a Monday show. That's where the holidays fall. So we gave you a little bit of a taste of crypto here. Unfortunately, not a lot to sink our teeth into. Let's look really quickly of these ETH micro contracts. It was the biggest trade was a little bit longer term, going out to March, about 70 days to go. The 40, my goodness, it's pretty far out of the money. The 4,300 calls went up 1,660 times. It looks like it's a 4,200, 4,300 vertical that traded 1,600 times, 1,000 by 600 actually, and then 250 by 1,000 on Wednesday. So that's just a weird one. I don't know what they're up to there. 100 point wide vertical in micro Ether when Ether itself is shy of 2,500. 70 days, it's going to nearly double. I don't know. It's quite the trade out there, but then again, it is crypto at the end of the day. Let's keep on rolling, though, into a product category that's also generating a lot of headlines and thankfully also some more volume. Let's go to energy.
It's time to tap into the deep options well of black gold, Texas tea, Nat Gas, and more. It's time to talk energy.
All right, listeners, to the wild world of energy we go. Go in that drop down, pop out of cryptocurrencies, and then go down one more slot to energy. Then we have, of course, an embarrassment of choices out there. We have RBOB, again, not a lot of paper there, leading the light side. WTI number 2, and then Nat Gas coming in at number 2 to the dark side this week. So a lot of people are fixated on the action in WTI. I think we're going to start there. WTI kicking off the show. Obviously, as we said, kind of rallying a bit this week. Whenever the missiles start flying in the Middle East, you're going to see a little bit of upside in crude, and that's pretty much what we're seeing out there right now. Right about a little bit shy of 74 in WTI, up about a $1.15 or about 1.6% since Monday. Of course, if you go back to our show last week, it's up about 2.6%, so a little bit more of a rally out there. Carley, like I said, a lot of unease in the Middle East. That's going to usually translate into some price action in the energy sector. What's catching your eye out there in WTI this week?
Well, Mark, this is more my cup of tea, and so I have a little more to say about this market. I've actually been on the media circuit talking about crude oil quite a bit in the last couple of weeks. We've noticed an interesting pattern on the chart, looking at a weekly chart of crude oil. there's a trend line that dates back to 2016, and we've tested that trend line on 5 other occasions. It's held 4 out of 5. The one time it didn't hold was COVID. But as long as this trend line's tested during the first quarter of the year and the oscillators are oversold as they are now, this has been a very, very reliable bottom signal. With that said, I wouldn't be shocked to see crude kind of flush out the week longs because we've been trading sideways. We're up today, and it looks like maybe we might be up on the week, but the reality is we're trading sideways. And usually when crude's trading sideways, it has a tendency to flush out the sell stops before it bottoms out. So I think we're in the process of bottoming, and statistically, the odds are pretty good. So I think as long as we hold the 66 to 68 support area, I think we're heading up into the 90, maybe even $100 a barrel range. So we're bullish.
Wow, that's quite very bullish.
Yeah.
Triple digits again. Oh, you heard it here first, or maybe second here from Carley on the mark. There you go, listeners. You down for that? You buying that? A little of triple digits again in W? I know your pumps don't want it. Your wallet doesn't want it. We are all short crude inherently at the end of the day, Carley. But
that is true.
Intriguing stuff out there nonetheless. Let's see if we can find some intriguing paper to go along with that hypothesis out there. Like we said, a truncated holiday week over there at CME. So volume still surprisingly robust. 340,000 contracts on the tape right now, again, with 1 day off this calendar. So that's actually a decent amount of paper. That's coming in line, if not heavier, than we would see if we had the full trading week out there. So intriguing stuff. Usually for a normal week, we're around 400 to 440, 50,000 out there. So looking pretty robust out there. And looks like the big dog this week, we're going out a little bit. We're going out about 27 days to get the March contract here. And that's expiring in about 27 days. Looks like paper buying the 60 puts. That's where I'm getting ahead of myself. Looks like 42% of the paper going up in the March contract this week as well. So even though we have weeklies and now what are effectively dailies going off over there in WTI, people are going a little bit farther out right now, going out about 27 days. That contract in March, the vol is about a 33, off about 2.5 points this week. So vol coming in a little bit. The puts last week, 3.7% bid. This week, about 3% bid. So still right around the 3% level. Not a huge move on the put side. Calls, same deal, 1.2% cheap last week, about 1.9% cheap this week. So calls coming in a little bit, but again, nothing huge out here on the skew front. If you go a little bit farther out, let's see, if we go out to, let's say, October and November and December of this year, then you start to see a nice bid for the puts of about 10, almost 11% out there. So a little bit of downside, and also they're fading the upside call, 6.6%. So they're gearing up for some downside longer term, but right now the skew not really heavily biased in either direction. And then, like I said earlier, it's the 60 puts in March that are leading the dance this week, such as it is. 8,300 contracts is enough to take the top spot on a truncated holiday week. All of that going up pretty much on Tuesday. 4,700 on Tuesday, 2,000, about 2,100 on Wednesday, about 1,500 today. Opening throughout the week. So a lot of people opening on the 60 put strike here, Carley. Which maybe they're spitting in the eye of your prognostication of some upside. What do you think about these 60 puts in March, Carley?
Honestly, I don't think that's a bad play. I do think there's a pretty good chance of like a bit of a flush out that, 1 or 2 big down days probing lower, just to kind of test things out. And so I don't think that's a bad play at all. But short term, I'm a little, I acknowledge their downside risk. Long term, I'm bullish, but being long some puts probably isn't a bad idea here. They're kind of cheap, and crude oil, can do big things in a single day. So I don't blame them at all.
And what kind of time frame? You say long term. What kind of time frame are you looking at for this return to triple digits in WTI?
Okay. So seasonally, sometime between January and March, the market has a very strong tendency to bottom out. And so it can be really messy. So it's most often late January, mid-February. So I think we have, let's say 2 or 3 weeks of risk of a pro blower. But if we're talking like months, not weeks, I think that's where we start getting the upside. Seasonal top isn't until October. So once we finally do find a bottom sometime in the first quarter is my best guess. We we work our way higher. Probably takes some time, but I would say if we're right about seeing 90 to 100, that it might even take most of the year. Might even be something we see late quarter, early third quarter. I'm sorry, late third quarter, early fourth quarter.
So more of a slow grind rather than an explosive upside up there. That's interesting. So,
yeah,
okay,
correct.
Good.
Yeah.
So are your DeCarley clients, are they loading up in some longer term upside? How are you playing this move to the upside these days?
Well, so we had a few, I don't remember the exact date, but it was a little while ago with when crude was on a little bit of a bigger dip. I want to say like mid-December. We had recommended some bull call spreads with naked puts to pay for those. We've bought back our naked puts, so we don't have any downside, unlimited exposure on the downside. And we're just hanging on to some call spreads. So we have limited upside risk. I would consider this kind of a nibble position. We're waiting for a bit of a washout to get more aggressive. So we'll probably, if it does wipe out somewhere into the high 60s, which again, I think is somewhat likely, we'll probably look to get a little more aggressive with it. Probably entails some sort of call spread with a naked put.
Call spread with a naked put. There you go, listeners. Intriguing stuff. Let's see what else we see that's intriguing out here in WTI this week, listeners. If you want a little bit of upside, there is some to be found. The March 80 calls also pretty active this week. In fact, they're kind of tied for number 2 with the March 65 puts, both of them around 7,400 contracts. So we'll go to the 65 puts first really quickly. Also very active on Monday. Monday was the big day for puts and for everything. A lot of people coming in. I keep saying Monday. It's truncated holiday week, so obviously that's Tuesday. So if you hear me say Monday throughout the show, listeners, I really mean Tuesday. It's a TWIFO show. I have Monday beaten into my head after all. 65 puts going up on Tuesday, 3,000 times, 2,800 times on Wednesday, 1,600 times today. So back and forth, opening to closing. Closing on Wednesday, looks like opening again today. OI is about 14,000 on that strike. So there's some size OI there. And then right behind it, we have the 80 calls. So again, there is some upside to be found. Also doing about 7,400 contracts. Also doing the lion's share of that paper on Tuesday. 3,300 contracts on Tuesday. 2,400 today. 1,600 on Wednesday. Looks like opening throughout the week. And then an OI coming into today of about 15,000 and change. So again, decent size OI on all of these strikes out here. Not to be outdone, right behind it, we also have the 85 calls. So it's kind of a March put and call palooza out here this week. About 7,000 of the March 85s going up. Again, guess which day was the busiest day? Yep, it was Tuesday. 3,500 on Tuesday. Almost 3,000 today, so no slouch today. Only a couple of hundred yesterday. Again, OI on this strike about a little over 14,000. So today's paper is anyone's guess. But yeah, just an explosion of paper, pun intended, out there in WTI this week. Let's go a little bit farther out just to see. A lot of times with crude oil, there's some intriguing longer term, or often sometimes even near dated. Now that we have some of these dailies going off, there is some near dated flow. The 75s expiring in about a day, trading 4,400 times this week. So not quite in our top 5 most actives, but getting a respectable amount of paper nonetheless out there. So again, there is some paper going out tomorrow out there. Looks like they did 3,000 on Tuesday, about 1,000 today, and about almost 500 on Wednesday. OI is 2,400 coming into today. So again, today's paper could be closing, but 75s, interesting. Maybe some folks getting ready for a little bit of a pop, a little bit of upside here, maybe overwriting here. 1 day to go, so we'll find out pretty quickly how those are working out. 76s with about 8 days to go, also pretty active on the near dated side, 3,200 of those going up this week. And then if we go a little bit longer term, as we always like to do, let's go out to the 120s. We're getting out there now, listeners. The August 120s. Did you have AUG 120 on your bingo card? If so, congratulations to you. You are a market savant. It looks like it's on Tuesday. There was a 110, 120, 130. Can't even really call it a fly. It wasn't symmetrical. It was about 2,000 of the 110 calls going up, followed by 8,000 of the 120s. So that would be 4 by 1. And then 6,000 of the 130s. So funky ratio, maybe a ladder out there. 2,000 by 8,000 by 6,000. 110, 120, 130 vertical going up. Again, a total of about 16,000 contracts. So altogether, there's a pretty beefy trade from a contract perspective. But yeah, just a lot of weirdness. I don't know, Carley, is that on your radar? The 110, 120, 130, August 2,000 by 8,000 by 6,000. Call it a ratio vertical if you like, I guess.
No, absolutely not. In fact, I don't know what I hate to say this, but it sounds like some sort of commission generation scheme. So I can't think of any good reason to put that on.
So that's not what folks are getting when they're calling up DeCarley. They're not getting the
No.
2x8x6 trade.
No, they are not.
All right. Maybe they're getting a little bit of Nat Gas instead. That's also a mover and a shaker out here in energy this week. So let's head out there next. Just pop out of crude oil, listeners. Go down 2 slots in the product family to Nat Gas, and we are off to the races. Carley, I know this is a favorite of yours. Chances are when you're coming on the show, you're going to be talking a little bit of Nat Gas. Looking a little bit lighter this week. As we said, it was our number 2 dark side mover. Off about 60 cents or about 18, nearly 19%, coming in at about a little bit shy of 270, 269 right now. So kind of just coming off across the board here, kind of continuing a trend out here that we've seen for a while in Nat Gas. What's catching your eye out there in Nat Gas this week?
I think natural gas is probably in store for some sort of a double bottom. So if we break below 230 in the March contract, I think we kind of cascade lower and even make a new low. So somewhere in almost the $2 area, believe it or not. But I think that's the place the bulls are going to want to get aggressive, because if that happens, we'll probably be getting close to the seasonal low in March or April, and the price will be right. So be on the lookout.
Wow, $2. Haven't seen that level in a little bit.
I know.
That'll be certainly something interesting to watch out here, listeners. Speaking of things to watch, is there a lot of paper out here? And you know what? You would never know, listeners, that it was a shortened holiday week, because, man, if we had a volume movers and shakers, this would probably be topping the list out there. Normally, on a full trading week by this point, we'll see Nat Gas somewhere around 400, 450. Maybe a hot week, 500, 550, maybe 600,000 contracts. But on a shortened holiday week, you're not going to expect to see that. No, we saw that and then some. Already 990,000 contracts, nearly 1 million contracts have already gone up in Nat Gas this week, listen. I think that technical definition of a banger, nearly 1 million contracts. We haven't seen that kind of paper in Nat Gas in quite some time. My goodness, that's a lot of paper. And of that, 38% is going up in the closest to home contract. We've got the Feb contract that goes out in 8 days, doing, again, 38% of the paper. The vol out there is at a 79. So, man, these numbers are kind of all over the place this week, coming in a whopping 25 points. So, again, we got some funky data out here with a truncated holiday week, but this is saying we were north of triple digits in the vol in that Feb contract not too long ago. So it's still at a 79. So looking pretty frothy. If we get beyond that very near dated contract, we go out a month to, let's say, March, things get a little bit more even keel at about a 58, 57 3/4. Still coming in quite a bit, almost 10 points, but maybe a little bit more manageable from a vol level out there. Skew wise, again, we saw some pretty impressive numbers last week in the Feb contract. Still has 8 days to go. The puts 8.1% cheap this week, 9%. It's not a huge move in the puts, but the calls were 13.5% bid. Those calls were getting juicy, and that was on top of a at the money vol level that was already, according to this, 104%. So you were paying up if you wanted some 25 delta calls going out in about 8 days in Nat Gas last week. And so far, at least, that trade has not worked out. Those calls still 8.1% bid, though. So still a little bit of upside bias out here, which is kind of interesting, especially if we're looking maybe, as Carley was predicting, maybe threaten a little bit of downside out here. If you go a little bit farther out, though, listeners, again, Nat Gas always has that seasonality component to it. You start seeing that bias start creeping into the puts. You're looking at June and that time frame, you're at about an 8% premium now to the puts. So they pretty much flip. They're 9% cheap now. You go out to June and it's an 8% premium to them. So a little bit of a flip out there, which is also intriguing. And in terms of intriguing action, what do we see this week in Nat Gas? Obviously, there's a lot of it. We could probably do the rest of the show just in Nat Gas. How much paper is going up out here, listeners? 3 half calls going away in 8 days. 41,000 of those trading this week. Again, it's only 3 days, listeners. This is bonkers paper. 18,000 of them on Wednesday, 13,000 today, 9,600 on Tuesday. Looks like back and forth, opening to closing. Still size OI, so anyone's guess on today's paper. 40,000 right behind it. How about the 4 calls? Carley, does that float your boat? The 4 calls expiring in 8 days? It floated somebody's boat. They traded 40,000 times this week, Carley.
Yeah, listen, the days of 2021 and 2022 are behind us. The odds of a repeat of something like that is very, very slim. People need to look at a chart dating back from like 2012 to 2020. That's probably the environment we're in. Winter spikes and then sell-offs.
You're just bursting everyone's bubble here on the show.
I know, I'm sorry.
Today, Carley. Someone's having a ball, slinging the 4 calls expiring in 8 days. Who are you to crash their party, Carley? You know, they're having fun. Let them have their fun for 8 days.
It's true.
They're gonna know really quickly if those calls are working out there. But nonetheless, I mean, is this a literal explosion of paper here? Nearly 1 million contracts in only really 3 trading days. Does this surprise you, Carley?
You know what? It does. I hadn't noticed that much volume was going on, and hearing you say that makes me even more bearish. So we'll see how it goes. That's
it. You're sold. You're hitting every bid in Nat Gas now. You're out all the way down to 1.5 now. Maybe Carley just crushing it all the way down, hitting all bids. Wow, yeah, this is almost too much paper to do in the rest of the show. This is like VIX on a crazy day. You know, paper on every strike for days. Let's look here. The 3 calls also pretty active, listener. So if the 2s are not, or excuse me, the 4s not floating your boat, expiring in 8 days. How about the 3s? They have a little bit better chance. 29,000 of those trading this week as well. My goodness. The busiest day today, about 11,000 today, 10,000 on Wednesday, about 9,000 on Tuesday. It's like opening throughout the week. So opening on the 3s. There was opening on the 4s on Tuesday. Just what are we doing out here? I guess there could be size overriding. How much are you getting for the 4s at this point in 8 days? Probably not a ton, but if you are overriding that strike, I suppose more power to you out there as well. Not to be outdone on the put side, we also had some puts going up, which you would expect with this sell-off. The 2.5 puts going up 36,000 times this week. Again, just paper for days. Today, 13,700, 11,200 on Tuesday, 11,100 on Wednesday, opening all week long. That one makes a little bit more sense to me, Carley. I could see we're about a 269 right now. People piling into the 2.5 puts with about 8 days to go. I can get behind that one a little more than I can say the 4 calls with 8 days to go, Carley.
I'm with you. I think that seems like a more realistic proposition.
Yeah, a little bit more reasonable there. How about the 2 3/4 puts, listeners? Also lighting it up this week to about 14,000 of those. So now we're coming off some of the lofty volume levels, but still, paper for days, 2 3/4 puts going out, or I should say going up 13,600 times. If we go out to the full March contract, the 2 even puts. So Carley was just saying we might threaten that strike again soon. The 2 even puts, 36,000 of those trading this week, including 15,000 on Tuesday, 11,000 on Wednesday, 9,300 today. Again, opening all week long. There's already 28,000 open on this strike. It looks like they're piling into more. So 2 puts by March, listeners. You like those? Obviously, a little bit maybe better payout profile if you're buying them than the 4 calls in 8 days. But we've seen wilder things in Nat Gas in both directions. It's not all downside, though. 23,000 of the 3 calls also trading in March this week. Again, folks could be overwriting them. Looks like the big day is actually today. 8,700 against OI of 18,300. Wednesday, 8,500. Looks like paper actually closing some of those. So maybe some folks getting the heck out of Dodge on some upside. And then 5,600 on Tuesday as well. Slightly opening there. So again, we could spend 2 shows just breaking down all this paper here, listeners. It's almost too much. It's almost too much to analyze here. How about 1/2 puts going up about 10,000 times in June? 1/2 strike, listeners. It's been a while since we talked to 1 strike on the show, but 1/2 puts going up for 10,000 contracts nearly this week in June as well. So again, you can pick a strike, pick a month, and chances are it's going to have some paper on it, listeners. My goodness here. Wow, that's a lot to digest. So hopefully if you're out there slinging Nat Gas right now, listeners, you're listening to the show and you're maybe being diligent in what you're doing out there. You heard Carley just say she's kind of neutral at these levels. So unless you're maybe a seasoned Nat Gas head, this is a heck of a lot of paper out here. So maybe tread carefully, pick your poison out here. Maybe, just maybe, I'm going out on a limb and say, Carley, maybe don't buy the 4 calls expiring in 8. I think I feel safe saying that. What do you think?
Yeah, I think that's a fair statement. In fact, with all this paper on both sides of the market, honestly, this market is just kind of an accident waiting to happen. So tread lightly either way.
I think the technical term is a bonkers market here, Carley. So,
Yes.
Speaking of bonkers, you know what? You folks are never bonkers. We love you all of your feedback. Let's get to some of it now.
It's time for your questions, comments, and insights. It's time for Futures Options Feedback. Submit your questions at twitter.com/options, facebook.com/theoptionsinsider, stocktwits.com/optionsinsider, or via questions@theoptionsinsider.com. You can also submit your feedback via our Options Insider Radio Network mobile app, available for iOS, Android, and Kindle Fire devices. You can even ask your questions live via our Mixlr chat room. So grab the Mixlr app or just search for Options Insider at Mixlr.com. That's Mixlr.com.
All right, let's get to it, listeners. We have a bunch of questions of the week that we've asked you in flash polls that we need to pay off. A lot of them overlapping what we talk about here on TWIFO this week. And then, Carley, start mulling your VIX prediction. I'm going to ask you for that in a few minutes out here. First, let's pay off some polls and maybe get Carley's thoughts on some of these results. Let's go back first to the heady days of January 8th. Who can remember so far back? We were all so young and innocent, listeners. So second week of the year, we like to do a lot of sentiment polls to kick off the year. We asked you a very simple one to start off the year. We asked you quite simply, will the S&P 500 close positive on the year? Heck yes, heck no, or who cares? I'm in crypto. Only 5% of you go in the crypto route, which was kind of funny. But Carley, I was kind of stunned by this. Our audience, usually a pretty savvy bunch, usually a pretty skeptical bunch too. When they see a rally, they love to fade it. So I was expecting something closer to, 60% saying we're going to fade, that it's not going to close positive on the year. Instead, Carley, we got exactly the opposite. 73.3% of our audience saying, heck yes, the S&P 500 is going to close positive on the year. Heck no, only 21.7%. Like I said, crypto only getting 5% of the love. That kind of surprised me. We usually get a lot of cynics in our audience. What are your thoughts on that? And do you agree with that? You think we're going to close positive on the year in the S&P, Carley?
I will say that I'm probably in the heck yes group, at least sideways to positive. Not necessarily super bullish, but that's not on the poll. And I am surprised, yes. Especially, we're coming in with we came into the year with really, really hot sentiment readings, and the market's probably a little ahead of fundamentals. So I am surprised to see so much optimism, yes. It actually makes me feel like there's a pretty good chance for a first quarter pullback here, but I'm in the heck yes category though.
You're not the first person. I thought the same thing when I saw that. I was like, oh, maybe I want to start fading this rally. The contrarian in me came out. Not that I like fading our audience. Our audience is a savvy bunch, but yeah, that just struck me. It's that kind of unanimity we don't see very often, let alone to the upside. We also asked you folks, again, very timely last week, now that the Bitcoin ETF is approved, same deal, annual sentiment poll, is Bitcoin going to close positive on the year? Heck yes, heck no, or this time, I don't trade crypto. And we got some hodlers in our audience, Carley, because heck yes took it. A little bit smaller margin this time, 56.7% choosing heck yes. 25%, so a full quarter saying they don't trade crypto, even with all the action we've seen out there of late. And then 17.9% saying heck no. So, Carley, to summarize, we've got some S&P and Bitcoin bulls hanging out in our audience. What say you?
We do. Well, to be fair, some people consider Bitcoin a risk asset because it does track the NASDAQ pretty closely, or at least it has at certain periods and historically. So this kind of makes sense to me. And I think the fact that it's not quite as exuberant also makes sense. But if I had to vote, I would say heck no.
Heck no for Carley out here. And then our actual question of the week this week, listeners, kind of a fun one. Again, a new trading year. You kind of wipe the slate clean. You start planning your trading for this year. So we thought we'd ask you, while you're doing that right now, what options, strategies, or trades do you anticipate using the most this year? Obviously, we can only squeeze so many choices in. So we tried to put as many as we could into each selection. So we gave you 4 choices: long calls, long puts, or verticals, long verticals in either direction, or your covered calls, or your short puts, or again, short verticals in either direction, or your straddles, your strangles, and your butterflies, or getting a little bit more advanced, the calendars or diagonals. Carley, if you have a choice in that bunch, have at it. Or maybe you have a write-in of your own. Maybe you want to write in for your ladders. I know you love those. And then B, what do you think our audience is going for?
I'm going to say vertical spreads, vertical debit spreads, so bull call spreads, bear put spreads, because that's what most people tend to go for because they like the limited risk. If I were going to write in, I'd say risk reversals.
Oh, risk reversals. There we go. That's another selection we don't put in there. They tend to be a little, I love a good risk reversal as well. They tend to be a little esoteric. So again, with only 4 choices, we can't fit them all sometimes. But that's a fun one as well. I would have thought you would have gone for the ladder. I know you like a ladder, but a risk reversal. Yes, right. You like a good risk reversal out there as well. And our audience agrees with you, Carley. 40.5% loving themselves a good debit vertical out there, or just buying a long call or a long put straight up. They want to buy some premium, Carley. They're looking to pay. And then 29.7% saying they want to sell some premium, covered calls, short puts, and verticals. 21.6% going for straddles, strangles, or flies. And right now, only 8.1% for calendars and diagonals. I'll have to check. We have a bunch of write-ins. I don't know if anyone's written in for risk reversals yet. You might be the first one, Carley. So there you go. Breaking new ground there. Now we've come to the moment you might be dreading, Carley. I don't know. But I said you were the closest of our many guests last year with your VIX prediction. You guessed around a 13, and it was about 12.45. So you were within a 1-year time frame. It's not a bad margin of victory, I'd say, at the end of the day. So I want to make sure you got a chance to play again this year. See if you can retain your crown for another year. So Carley, you've been mulling it over. Our listeners want to know, what are you feeling for a VIX closing print at the end of 2024?
I'm going to say 16.
16 even. Okay.
16 even.
There you go, listeners. Carley going for a little bit more juice, but not a ton out there at the end of the day. Hopefully you folks got your prognostications in already, because those were due a couple of weeks ago. If you want to play in our end of the year guessing game, see if you can win our vol prize. Hopefully you got them in there. I know quite a few of you did, thousands of people playing along in our poll out there. So hopefully you got your guesses in so you too can win fabulous prizes. All right. That music means we've come to the end of another wild and woolly crypto and energy-filled episode of all things TWIFO. But before we go, Carley, if folks want to reach out to you, maybe they want to debate your outlooks in WTI or in Nat Gas, or maybe they want to put on some trades, where should they go? What should they do?
Sure. I'm always up for good debate, so you can find me on Twitter or X, whatever you want to call it. Handle is @Carley Garner. It's CarleyGarner. If you're looking for brokerage services, we'd love to talk to you as well. You can reach us at DeCarleyTrading.com.
We've had your favorite person, Mr. Russell Rhodes, on a few times recently. He keeps mentioning you all the time, so we'll have to get you two together on a show one of these days again. I know that would make his day. I know you probably would hate it, but he would love it. So we'll try to make his day out there. Make you slum it with him for a little bit over there. All right, listeners, check her out over there at DeCarley Trading, or find her on Twitter as well. A lot of great stuff coming out during the week on Twitter, even when she's not appearing on shows like this. And of course, you know where to go to find all these TWIFO reports and a whole bunch more. CMEgroup.com/TWIFO. TWIFO is the place to go to kick the tires and light the fires over there. That's going to do it for us on the network today. Back again tomorrow. It's been a wild, truncated holiday week. What's going on from a vol perspective? Let's find out tomorrow at noon on Volatility Views, or on demand wherever you get our podcast. And then, of course, coming back after that exclusively for you pro folks with a whole mess of options oddities. Should be a fun one. A lot of weird trades going up. A lot of fun ones, a lot of profitable ones, and a whole bunch of losers out there. Not ours, but other people putting them up. So we like to talk about them there as well. You want to get all that action, only one place to go, theoptionsinsider.com/pro. Like I said, keep an ear open on the pro side for that panel as well. I won't say who, but someone may have snuck a recorder in there, so should be fun to get that one up there for you too. theoptionsinsider.com/pro. Then we're back again next week on the option block on Monday and the crypto rundown. So if you like crypto, make sure you tune into that on Monday or on demand wherever you get our podcast. And then coming back all the way through next week to next Thursday, another episode of This Week in Futures Options. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.